Hello everyone and welcome to the Like a Tortoise channel. I want to tell you guys about my recent investment in PayPal. More precisely, yesterday I decided to add more shares to this company, which I still think is on the early stages of is in the early stages of a major turnaround, and I will delve deeper into the whys in this video. Okay. Before I start, and for those of you who don't know, Alex Kreis is PayPal's new CEO. He took over. He took the helm in 2023, so almost 2 years ago. And I just think this guy is a rock star. If you look at his track record at Intuit, where he was working at prior to joining PayPal, this guy has been responsible for a lot of the growth at Intuit. While he stayed there, he was responsible for a lot of the growth the company witnessed, and I think PayPal stands to benefit. And sure enough, we are already seeing the benefits of his execution. And so without further ado, let me show you exactly what I want to share with you today. First of all, if you want to know a bit more about Alex Kreis, yesterday I watched one of his recent YouTube videos. In fact, I can share that with you right now. This is the video here, right here. He was at Barron's about 11 days ago, and it's only 20 minutes. And here he explains that if you think PayPal is going to explode over the next few days, then this is not an investment you should be in. Okay, this turnaround story is going to take a while, and and he's very transparent. Look, he's saying that the company is on the right track, and we will discuss why. But he's also saying that a lot of the things that they are doing will certainly take a while to materialize, and so we can't expect to rush things. In fact, that was part of previous management's mistakes, right? They, for example, one of the things they used to do, which I hated, was they would overpromised, all right, and what happened is that they would miss expectations, revenue and earnings expectations, because of those overpromises. This guy under promises, and then he beats on earnings and revenues expectations, which is in stark contrast. Okay, and I prefer a guy like that, a guy who is shareholder friendly, and who's thinking long term. Okay, so why is PayPal such a big deal, and why hasn't the stock moved? Again, the story hasn't changed one bit. In fact, if I go here to metrics, and I'm on stock and lock, as you can see. If I go here to trailing 12 months, you can see that this has all the ingredients, all the elements that can make it a successful turnaround play. Gross margin is already on the way up. Yeah. And look, this goes back to 2022. Let me push this further back. You can see that they had been down, but then ever since Kreis took over, so gross margin is on the rise again. Look at what's happening with operating margin, going back again. In fact, these are one of the highest margins the company has ever boosted in its history. That's a big deal. Also, look at net margin. Okay, ever since 2022, already on the way up. Another big positive. If we go to income statement, you can see that total revenue has been going up. In fact, it never stopped going up. And the reason revenue hasn't gone up at higher rates is because Alex Kreis wants to focus on sustainable growth. Okay, he's getting rid of low margin businesses. For example, he's cutting some elements so he's not just growing revenues for the sake of it. He wants to grow revenues sustainably over time, because ultimately that's going to create more well, it's going to lead to more profitability, if you ask me. Okay. And I think that's certainly a big positive. And if you see net income, so profitability, earnings are also on the rise ever since he joined. In fact, they are at the highest levels in a very long time. And the same happens with free cash flow, which is stunning. The company is producing the highest levels of free cash flow in its history. All right. And it's crazy when you think about it, because the stock price has really done nothing over the last 3 years, since 2022. At the same time, fundamentals are improving. That's the disconnect we are looking for as like a tortoise type of investors. If I flip this to the yearly chart, look at this. This is the highest the company has ever produced in free cash flows, which give them a lot of optionality to buybacks, to do buybacks as long as the company remains cheap, and also to reinvest into new opportunities. And I think there are many for PayPal. This is a company that is at the forefront of innovation, and this is also a company that has recently, not just recently, but they have been entering partnerships with multiple companies. Some of them, the very well-known companies like Google. In fact, this is something that I shared with our community members yesterday. You can see that PayPal recently announced a multi-year deal with Google to integrate AI-driven payment solutions into its ecosystem. And of course, this aligning with the company that handles billions of daily consumer interactions opens up a powerful growth avenue. Of course, Google, as we all know, has billions of customers. Do you think this strategic partnership will end up benefiting PayPal? My answer is yes. It may not move the needle over the short to medium term, but it's something that will create additional value over time, and it's just one more catalyst. Let's talk about attractive valuation. What do I mean by that? So you already know that the fundamentals are improving, but now what we want to discuss is valuation. And if we go to stock, if I go here to my intrinsic value calculation sheet, you can see that PayPal, look at the PE. The PE is only 14, and the price to free cash flow is only 12 times. That's crazy. Yeah, a company that is still growing, so it's priced as a cheap financial company. In fact, if I go here to PayPal, the sector is the financials, and you can see that the PE of the entire sector is about 18 times, which is a lot more than what PayPal is trading for. So I don't think that's fair, because PayPal is still a growth story with so many of the catalysts we already discussed. Remember, they used to be a payment solution provider, but now they want to evolve into a full-blown e-commerce giant, because they serve over 400 million customers worldwide, and also and of course they have this dual platform that serves merchants and customers, so they know once they know the two sides, which is part of the reason why Alex Chris wants to turn this into an e-commerce company, right? And provide an entire end-to-end experience to these users, which I think is very, very clever. So in terms of valuation, you can see that if we look at, let's go here, PayPal again, and you can see that on a forward P basis, that's only 12 times. That's crazy. So the company is very, very cheap. In fact, analysts have an average price target of 83, which equates to a 22% upside from current levels. But I think this is very conservative, if you ask me. All right, and this is because they are thinking short to medium term. But I want to think long term, and so in my template, as you can see, I'm assuming earnings per share. I'm assuming 13% growth over time. according to stock analysis, if I go here to statistics, you can see that analysts are estimating earnings per share growth of 16% over the next 5 years. Yeah, 5 years. I I want to be more conservative, and I'm using 13 times. And if you go, so you already know our valuation models. If you want me to talk more about the three valuation models that I use for my valuation analysis, which include margin of safety, payback time, and 10 cap rate, let me know in the comments, and I'm happy to do that to break them down. To break them down for you, okay? But in simple terms, the payback time tells you how long it takes you to get your money out of the business from earnings or free cash flow, assuming you were buying the entire company today. And ideally, you want to be able to get your money out in 8 years. Yeah, because the average S&P 500 company, the average P for an S&P 500 company is, say, 16 times. And so if you can get your money out in half that time, that's already a significant margin of safety. So let's do it with earnings. And I'm using the latest net income. And what I'm going to do is I'm going to grow those earnings at 13% per year over 8 years. And then I'm going to sum them up. And that equals 72 billion. If you divide 72 billion by the number of outstanding shares right here, that gives you that gives you right here $72 per share. And the company now trades at 67. And remember, this already has a 50% margin of safety built in, which means, according to this metric, the fair value for PayPal, the intrinsic value, is about $144 per share. If we use the free cash flow, which is less, free cash flow, according to what management was saying during the conference call, they expect to end the year with free cash flows around between 6 to 7 billion. I'm using this figure here from the latest, the trailing 12 months, so it's more conservative. But even if you use that figure, yeah, you do the same thing that we did for earnings. And if you divide it by the number of outstanding shares, the cumulative free cash flows, that's 76. So that's still above the current price of PayPal. So PayPal is trading like almost as if there was any growth potential going forward. I love that because, again, this is what allows us to make a lot of money as conservative investors. And of course, the 10 cap rate is the most conservative method because it doesn't include any growth assumptions. What we do is we do the operating cash flow minus the maintenance capex, and then we add the tax provision, and that equals the total owner earnings. And then what we do is we divide total earnings by the number of outstanding shares. And if you do that, you can see that so we get the owner earnings per share, and then you just multiply this by 10 and it gives you 66. And so this is the price you should pay for PayPal. Again, it has a 50% margin of safety. All right. And I can talk a bit more about this as well in another video. But essentially, this comes from real estate. And all these methods, I use them because I attended Phil Town's virtual workshop about 5 years ago, and they stuck with me ever since because I'm a conservative investor and I love using conservative valuation methods, if that makes sense. Okay, so I think, yeah, this pretty much sums it all up. And in another part of my analysis, and also part of the reason why I decided to buy more, in fact, if you contrast PayPal with other competitors like Block, okay, you can see that Block has lower profitability metrics, lower capital allocation numbers, lower margins. They have higher debt levels, and yet the company is priced more expensively, which, in my opinion, doesn't make a lot of sense because, granted, I understand that PayPal, remember, is growing faster, right? Sorry, Block is growing faster than PayPal, which explains the higher multiple. However, I don't think PayPal should be trading at such a steep discount compared to Block or the industry. Okay, that's even more that's even more appalling to me. But look, yeah, this is what I wanted to discuss here in this video. So if you find it useful, if you found it useful, let me know in the comments, and I'm more than happy to create more videos of this sort. And if you haven't subscribed that, and if you find it useful, share it with your own audience, and leave a like button as well. It will help the channel quite a bit. And let me know any suggestions. My goal with the channel is to share a lot of the knowledge that I acquire over time, but also to grow alongside you. And so I will always put my money where my mouth is, and because we are in this together, right? And so let me know any suggestions. Feedback will help me grow as well. Stay tuned, and thanks a lot.